Good morning. I'd like to call the Finance Committee meeting to order. Roll call.
Mr. Eckhoff?
Aye. Or
Mr.
present.
Mr. Fairfield? Mr. Hess? Ms. Polk?
Present.
Ms. Weber?
Present.
Ms. Parker?
Present.
Mr. Searoy? Mr. Swanson?
Present.
Mr. Featherling? Mr. Dennell? Mr. Miller? Mr. Long? Mr. Hunter? Ms. Foster? Ms. Armour Ernst? Mr. Wheeler? Mr. Alexander Hildebrand? We have a quorum.
We have a quorum. Can I have a motion to allow Mr. Swanson to be via Zoom? Moved by, or first by Mr. Donnell, second by Mr. Miller. All in favor say aye.
Aye.
Opposed?
Aye.
Motion carries. Welcome, Joe. Next up, public comment. I have no slips for public comment. Any public comment in the back? Seeing none. Next up is the nationwide 457B deferred compensation plan and provider change. I believe Anita is going to tee this one up for us.
I am going to tee it up. Actually, Tyler is here in case you have specific questions, but if you remember from last month, what we did was say that we allowed him to kind of meet with each of our 31 employees that have the nationwide plan. That's what we're looking at changing from nationwide to Equitable would be an Empower plan. And so Tyler has done that. He's talked to between 18 and 20 of the 31. He's got an appointment as soon as he pops out of here with another employee, and I think you've got 3 or 4 that you've got lined up for this week too. So the important thing is this. First, there was some confusion because if you remember right, we talked about the administration fee being less with Equitable, and there was some confusion with our employees because on their statement they don't see an administration fee, and so they thought that they weren't being charged one. I actually called Nationwide and had a long conversation with someone there. What they show on the front of their statement is what's called a unit cost instead of a share cost. And actually the young man I talked to at Nationwide had to put me on hold and go find out what that is because he doesn't typically see it. And so in that unit cost, there will be a little like asterisk or a pound sign next to it. And then you go to the second of last page of the statement, and it explains relevant to that little notation what fee is being charged. So it takes a little bit of work, and there was some confusion with that on more than one of the people that you talked to, that they thought that was it. Now there is one fund in our nationwide group. Our employees have 62 funds to choose from. So there is one fund, a fixed rate fund, that charges no interest. It's the most conservative, and essentially it's similar to a savings account, right? And that does not charge a fee. Equitable has a comparable fund, and what will happen is for all our employees here, the funds that they are currently enrolled in will roll over to a corresponding fund under Equitable. So it will be about the same type of fund, not the same fund, same type of fund. Okay, so they're going to, if you happen to have money in the fixed and are seeing a 0% administration fee, you'll see that under Equitable as well. And I think, what was the other thing to talk about? I think the other thing was overall, the estimate is that our employees will see the plan as a whole with all the enrollees. We'll see about a $20,000 reduction in fees year over year. So that's money that our employees will keep and benefits their investment. So that's where we're at. At this point, we're recommending the change. That was the last thing in the conversations. And what I heard back from the employees that did call me was they liked the engagement, not just on the plan that was in Nationwide, but other things in terms of preparing for their retirement, possibly a, you know, a 529, right? Is that right? Am I saying it right? But I had employees saying, several of them said, well, this is a big mistake on my part. I'm dumb. I have never followed up and I have never checked into what this is or followed up, and I really appreciate the engagement and the conversation. So that is something that this plan, this change would bring us. It's better guidance to our employees to help them prepare for retirement. So at this point, we are recommending the switch from Nationwide to Equitable. And if you have any more specific questions, Tyler's here. He's kind of had me as a puppet. How'd I do? Okay.
So can I have a motion to approve? Motion by Mr. Dunnell, second by Ms. Parker. Any discussion or questions for Anita? Okay, roll call.
Mr. Eckhoff?
Aye.
Mr. Fairfield?
Aye.
Mr. Hess? Ms. Polk?
Aye.
Ms. Weber?
Aye.
Ms. Parker?
Aye.
Mr. Swanson?
Aye.
Mr. Featherling?
Aye.
Mr. Dunnell?
Aye.
Mr. Miller?
Aye.
Mr. Hunter?
Aye.
Ms. Foster? Ms. Armour Ernst? Mr. Wheeler? Motion carries.
Motion carries. Thank you, Anita. Next up is Mr. Lynch. Good morning, sir.
Good morning, sir. From the top to the bottom, I guess. The last time I was here, we talked about what we thought we would see in terms of the renewal action. And I was hoping to see something in the low teens. And what happened was that large claims had increased, and the underwriter took a position out of the gate for the renewal that they believed it should be set at closer to 17.8, and that's what is called a bundled price, meaning that we include the vision, which is able to be included in a discount provision. So we had already got quotes from the marketplace, and we went out to United Healthcare. We were rejected by Aetna, rejected by Cigna, and we got a new carrier quote from Allstate Benefits, and I'll say more about that in a minute. But all of them, United Healthcare and Allstate, were competitive, but what they really helped do was drive Blue Cross to revise their renewal. And in looking at this and the experience, having taken a little more positive result in the loss ratio, but not a worse position on the large claims issue, it caused them to review the plans very in detail that they were seeing, and they came back and they dropped the 17 down to 12.9. In my mind, it was a great thing to have done what they did, because their loss potential is still there because of these large claims for the year. But I believe that in every time we've seen a couple of bad years in a row, we've seen a good one coming up. So, you know, we hope going into next year we see some better loss ratio or experience ratio. So I hope that's coming around and they've made a good bet. I believe it's still the best product for the employee base here. And we see very little complaint with Blue Cross. And I think many of the departments like Blue Cross. There's some pushback from some of the other carriers that we've seen in the past. But after the revisions in their renewal, there was a small difference between all of them. And I would say that's under 2% in general. And that 2% in my world is not worth a move. There are statistics in the marketplace that say somewhere between 4 and 6% in terms of cost, interruption of services, or having meetings, things of that nature, which we don't mind doing. I'm just saying, for that little money, we believe that Blue Cross has done the best it could, and recommend keeping them as the player for the upcoming year. This is what is termed a bundled offer. I know somebody asked a question about Vision. Vision is included as a voluntary product in this as a bundled offer, and we get a medical discount for having Vision of 0.5%. Now, the bundled program that Blue Cross offers came into being in 2018. We had written the group term life and voluntary life in 14, so it's not eligible for a discount provision. We are working with Blue Cross to see if next year we can rewrite the program or come up with additional product lines to include. But we're going to do what is called an overview of all voluntary products that are offered at the county over the year. It's not an intention, it's not our intention to get rid of products, but to find out what the medical carriers are offering and how can we take advantage of more discount opportunities. So, our intention is to find more ways, and it doesn't really matter whether it's Blue Cross or it's United Healthcare, they're all doing bundled programs. So we want to make sure that at any point during the year with a renewal and then revised, how can we affect these numbers more positively by getting those medical discounts? So we will do that over the course of the year. Anita has promised that we can sit down, take a look at everything. And like I say, this is not an affront to any other carriers that are offering products, but if Blue Cross and United Healthcare are offering, and there's 2 and 3%, by taking a certain ancillary product that we can affect the medical rate, that's what we want to do. And so we'll take a look at that to get a better perspective. I would say in general, we don't have any further discounts that we can take advantage of this year, and the 12.9 is as good as we're going to get from Blue Cross. And I would say that my recommendation is to include that with the Vision. Also, I'd like to let you know, we had bid out those ancillary benefits the year before last, and Vision, Group Life have a 3-year rate guarantee which goes into this upcoming year, and I think ends in 2025 or 2024. Yeah, Andy. I'm sorry.
Sorry.
We have
Mr.
a
Chairman.
3-year rate guarantee with Vision. What do we lose if we? I mean, what's you said this is a bundled offer. If we don't
Right.
take Vision from Blue Cross,
If
what's
you,
the
if you
percentage
took it,
rate?
it's worth some, depending on how you categorize it, it's at 0.5% of about $6,800,000. So it's between 70 and 100 and some odd $1,000. I don't have the exact. Somebody can do the
Right
half.
around 85,000.
Yeah, 85. And so if, just to magnify that, then if we can add another 0.5% to 2 or 3 different other products, you can see there 70 to 140 and so on and so forth
Quite a bit of
to drop
savings.
the medicals.
So the number we have in front of us right now includes
Yes,
the Vision.
yes, excuse me, the 12.9 does include it. Correct. Yes, it does.
Anita.
To be clear, the 12.9 doesn't include the cost of the Vision. What Mike is saying
Sorry, the
is that
discount
it
factor.
reflects a discount for keeping our Vision with Blue Cross Blue Shield as a bundle product. Our Vision and our Life products both have 3-year guarantees, price guarantees that we signed last year. We don't have to do anything because we've signed a 3-year agreement last year. But the 12.9 reflects the fact that we're leaving our Vision and we're leaving our Life with Blue Cross Blue Shield.
Yeah, underwriting applied that discount factor
Okay.
already to
Okay.
give you that credit.
Got it. Thank you.
The other thing I want to say, and then I'll be through, is Delta Dental originally came in with a increased admin factor but recommended that the rates be dropped. I think it was 1.4%. We see right now the marketplace saying that dental inflation is somewhere between 4 and 6% depending on the carrier. I don't see a reckoning that you need to drop those rates. I think they should stay stable, because right now your rates and the loss ratios that dictate those rates for this voluntary program have been very stable. I just don't want to take a chance, take a discount, then turn around next year and have to raise them. I know every employee would like to see lower rates, but these are very competitive in the marketplace when I compare this program to fully funded rates that I see in the marketplace. So I believe you're better off just leaving things as they are. And I know this wasn't in the resolution, but you don't have to change the discount factor. They have discounted its administration rate, and there won't be an increase in the admin fee. Forgive me, I said that with a mouthful of mush. But yes, sir.
Mr. Featherling.
I have a quick question. When you say they rejected you, what does that mean when they say
They won't give us a quote because they don't feel that they can be competitive in the market.
So they don't even want to waste their time to even try?
Yeah, they don't even want to try, which is sad, but
it's kind of interesting.
Well, I'll say this real quickly. We used to have 17 carriers out there we could go in this general location, and now we're down to less than a handful. And that's what the Affordable Care Act did to the marketplace because of a variety of things. But I will say that Blue Cross, as an example, is the top dog in the marketplace in Illinois. United Healthcare is behind them. Aetna and Cigna, every once in a while you see them show up on the radar. I wish we could get Aetna and Cigna to be a bigger player in the marketplace. But when they see what the discount factors are that Blue Cross and United Healthcare are getting in the marketplace, they just can't compete because they don't own their networks. They rent theirs, or they put them together in their meluge of rental networks and other things. So I'm sorry for that because it hinders you in getting competitive quotes sometimes.
Okay, thank you.
Yes.
My takeaway really quickly is that you saved us 5% with, yeah, I know that, Andy.
No.
You say okay, but you saved us 5% with Blue Cross Blue Shield. You got them down 5%. That's pretty huge.
Well, it's a lot of money, yes.
Yeah.
And I would say that you still have the quality product in the state. I think it makes a lot of the employees here happy because
Absolutely.
there have been a number of different changes, but
I think that's
always a positive.
That's a big highlight, Chairman Wheeler.
Yeah, I guess it would be. Sorry, Mr. Hunter was asking me something about loss ratios in the past and in the future, and that's what the actuaries are basing their decision on for this next year because we've been with them for years. But there's not a lot of change in the lack of insurance companies, but there is a lot of change in the way these are funded, and I think that. If I could, as we talked earlier, that might be something we spend the better part of this next year really diving into the types of funding mechanisms. HRAs work. They have to be easy for the employees. You just don't drop them on them. We could have saved some money this year by putting in an HRA, but there's just not enough time. We were not going to do that to our employees and have them scattered. But we have to do that, I think, for the next year. So if the committee so chooses and you would choose that, we could probably put something together.
Yeah, and I think that we should probably have a group of committee members to go ahead and look over the insurance for next year and be a part of that discussion further.
Really the funding.
Yeah.
That's how the wrenches are turned these days.
Yeah.
I would heartily suggest that in two ways. Number one, HRA, yes. There are other funding opportunities out there that I would not just jump into. Because within the scope of a finance committee, you guys are going to have to understand these alternatives. And one is called reference-based pricing. It is a scenario whereby hospital pricing is deviated from how it's done in PPOs. And it involves using different approaches to how it's formulated. Medicare is a general tool of that. There's also, and just this is not, you just don't have to jump to self-funding, but there's self-funding, and there's several variations to self-funding, and it's always a better way to get into self-funding if you have a healthy group. And I'm not criticizing the county's group. I'm saying there's a lot of large claimants that would make self-funding a tough approach probably. The opportunity to save in self-funding is to have a reckoning point less than what the maximum claims are, and we may not see that, so why would you make that jump? But HRAs are another approach under that guise that might be able to be made. Now I will say, and very fairly, in 2013 and 2014 we came from an approach that was being done with insurance carrier A, I won't criticize, to insurance carrier B. There were a lot of claims that rolled over from one carrier to another that caught in what I'll call a dark zone. And people got a lot of phone calls that the bills weren't being paid, and what it was that carriers didn't know which claim belonged to which carrier. And HRAs can be done very, very well, but we have to find a great administrator.
Yeah.
And we have to know what we're doing so we can communicate it to the employees to understand it. So it'll take meetings, it'll take committee assignments to group together and decide, what are we going to reimburse. So.
And if anybody on the committee likes to go ahead and be a part of that committee or that group, working group, please let myself and Andy know.
And that would be my report.
All right. I think it's the first 4 items is what we're voting on with this group, correct? So could I have a motion to approve group medical, group dental, health savings account, and employee assistance program? Motion by Mr. Dunnell, second by Ms. Weber. Any discussions or questions? If not, roll call.
Mr. Eckhoff?
Aye.
Mr. Fairfield?
Aye.
Mr. Hess?
Aye.
Ms. Polk?
Aye.
Ms. Weber?
Aye.
Ms. Parker? Aye. Mr. Swanson?
Aye.
Mr. Featherling?
Aye.
Mr. Dennell?
Aye.
Mr. Miller?
Aye.
Mr. Long?
Aye.
Mr. Hunter?
Aye.
Ms. Foster? Ms. Armour Earps? Mr. Wheeler? Motion carries.
Motion carries. Next up is liability WC property. Homer, do you want to take this one? Good morning, Mr. Ryan.
Good morning. Thank you all for your time. Before the process started, we were in touch with Andy and Anita. They wanted to know where we were in the market, so we went out to market. We had anticipated about a 10 to 12% increase to begin with. We ended up coming in at about a 7.5% increase overall on your property casualty and workers' comp insurance renewal. We went to 10 markets on the P&C side and were declined by all 10 except for our incumbent market. Mike explained to you earlier on the benefits side how hard the markets are. On their side, it's very difficult right now in the P&C side. So we were very pleased to present a overall renewal with a 7.5% increase on both the property casualty and the general liability and the workers' comp. If there's any questions, I'll be glad to answer them. Otherwise, for your time, I'm here to just answer any questions. And Dane Mall is also here from Alliant. That's my partner that I work with. They're one of the 10 largest brokerages in the country. They're the marketing arm that has access to all the insurance markets that we went to. And so I'm the local person here that can come in and take the beating if I have to.
Any questions or comments? Mr. Hunter.
Thank you, Mr. Chairman. Homer, you're comfortable with the 7.5%?
Well, yeah, seeing how they were initially talking with us around 12 or 10, and we've there really is no other place to go in the marketplace. We went out, and one of the biggest issues we have are law enforcement liability claims. There's just a fear out there right now with all the changes that we've had in policy. We could see a large claim, and fortunately for us, we're able to maintain a solid carrier. That the Illinois Counties Risk Management Trust writes over 50% of the counties in the state of Illinois. They've been a good partner of yours for over 8 years. I think initially when we came in, we saved you about $500,000. I think we're right now getting to about that premium level with higher costs, higher building limits. Everything else is higher. So overall, we've been very pleased with our partnership with them. And I think that Anita and the administration has as well. We have a great law team that helps us fight off these claims. We just won a victory on a big claim that came through the other day. Mr. Rowe could talk to you about that at some point, but that helped us keep our rates in check.
Thank you.
Thank you.
Ms. Weber.
Thank you. I just wanted to confirm that the rate, that the amount stated on page 3, that 2.2 million is the rate, the number, the premium, bottom of 3, 2.2. And then
Anita says yes.
the only question I had is why does this one begin on 12/1 instead of, why does it begin?
Illinois Counties Risk Management Trust is a trust. They're have a common renewal date for all of their policyholders, and so 12/1 is that date.
Instead of the January.
Yes.
Chairman Wheeler.
Just drawing attention, I was talking to Anita before we came down here. The work comp number is phenomenal, in our opinion, because inflation is more than the number. I think we're doing pretty good on that situation. I don't know if that Anita would agree, but I thought it was going to be higher, to be honest, because of the market.
And if I could address that quickly, your mod factor has come down. That means that we're doing our jobs administering these claims, trying to do the best to keep those claims down for you. So that's part of it.
Yeah.
Right, that modification number, if you look at that modification rate in work comp, that's on page 8 of your packet. If you look down below, you have the gross rates from the insurance company and then adjustments, but there's a modification rate of 0.7. I've never seen one anywhere I've worked that low. And that does speak to the way we manage our claims and make sure that we are getting our people, first creating a safe environment, and number 2, getting our people back to work as quickly as possible. So,
And that's with an increased payroll too over the year. So we're very pleased with our renewal and would ask for your support.
Anyone else? First time, second time, Mr. Hunter.
Yeah.
And then
Anita, do we have a safety committee?
no, we don't.
Okay.
Mr. Hunter, just for your edification, we do provide a safety person to come in and do inspections for you at least once a year and as needed. So if there's any questions you have or need anyone to come in, if anyone in the county board that serves on any other committees has any concerns with that, we have a team that will be glad to come in and sit with you and advise.
And they do provide with specificity a written report, recommendations?
They do that every year and can do it for different divisions if you need.
Thank you.
good question, Mr. Hunter. Chairman Wheeler.
I just wanted, for the record, kind of glossed over, but it's a very important part of the process. We went to the market. I think 10, 11, 12 carriers were approached for this business. So we need to check the market from time to time.
Mm-hmm.
Not every single year, because then you don't get competitive rates. But I want to thank the group for their due diligence on checking the market as we required. And we should do so again in 4 or 5 years.
Yeah, I tend to agree with that. If you go to the market every single year and all those markets get rejected every single year, those underwriters aren't inclined to even approach you to write your business. It's just how it works. The benefit side might be a little different. I don't do that. But certainly in the P&C side, the underwriters stick with these companies for a long, long time. They have good jobs, and when they see a risk come in every year and they get declined, they won't write it, or they think they have a competitive program and they don't. It just spoils the marketplace when we do go. So even in this, the problem that we had this year is in this market, it's so hard. The reinsurance market is difficult. And the overall insurance market is difficult when you get claims, when you're looking at supply chain issues, inflation, all those things added up. We're very fortunate that the ICRMT is here at this stage of the game. So,
Perfect. Mr. Hess.
Make a motion, we approve it.
Motion by Mr. Hess, second by Mr. Hunter. Any other discussions? If not, roll call.
Mr. Eckhoff?
Aye.
Mr. Fairfield? Mr. Hess,
Aye.
Ms. Polk,
Aye.
Ms. Weber, Ms. Parker, Mr. Swanson,
Aye.
Mr. Featherling, Mr. Donnell, Mr. Miller, Mr. Long, Mr. Hunter, Ms. Foster, Ms. Armour Ertz, Mr. Wheeler. Motion carries.
Thank you.
Thank you. Thank you very much, Mr. Ryan. Next up is a resolution to allow the County of Kankakee to renew a lease with Riverside Medical Center. Can I have a motion to approve? Motion by Mr. Dunnell, second by Mr. Fairfield. Any discussions on this? If not, roll call.
Mr. Eckhoff.
Aye.
Mr. Fairfield. Mr. Hess.
Aye.
Ms. Polk.
Aye.
Ms. Weber. Ms. Parker. Mr. Swanson.
Aye.
Mr. Featherling. Mr. Donnell. Mr. Miller. Mr. Long. Mr. Hunter. Ms. Foster. Ms. Armour Ertz. Mr. Wheeler. Motion carries.
Motion carries. Is there any new or old business? I know it's not on the agenda, but is there any from the committee? If new or old, or motion to adjourn? Motion by Mr. Hess, second by Mr. Featherlane. All in favor say aye. Opposed? Thank you. We'll be back online.